All right. I want to talk about something right now that's a lot of newcomers and a lot of people that are first getting here to the website, going through the training, trying to figure stuff out, knowing about choke ups. Hey, I can't get into trades because there's not a fill rate available and it's only filling 20% of the time, but not in my session that I'm dealing with. And you get a lot of people who we understand things hit you. We're not your normal signal network, right? We're not your normal training network, or Christ, we're not even your normal company, all right? The way we act and the way we portray ourselves and our sincerity and our honesty and our transparency. But we also know that you cannot be the standard customer, or you will always be a customer. If you want to be an investor into this, you have to be acceptable and understanding and responsible and, of course, respectful for the entire process. All right. Respectful during the entire process. That means when shit doesn't go your way, you don't throw a tantrum over it. Trust me, it is very difficult in this industry to get where you need to get to unless you put the hard work into it. And that's what I've done. I've worked very hard at being uh, always forward moving. Okay. No matter what's thrown at us, we're always moving forward. So we know that if we find a new way to do something, it's being used and thought of and produced. It is really about taking the information that we've learned from our past and applying it to the present for our future. So keep that in mind. What I'm about to show you is not a 100% proven exact, this is what you're going to do and you're going to make $1 million process. You need to apply it to your own abilities. Okay. What it works for me works in a short term process, may not work in somebody else's long term view. So for me, what I do is that I use a handful of things to really look at the market and to really figure out, is this pair the best pair to be able to get into? So let me show you what I'm talking about. First off, let's get over and have a look at the signals themselves on DEX Trader here. We'll just use it. The DEX Trader signals are the same as the DEX signals because it comes from them. Okay, and we're going to talk about the dailies here, right? And we already know that the dailies are set in a range of the process that we know that it's a pretty high range between 40 to 60 pips difference when it comes out, and we know, and some of us know why that is. And for those that don't, make sure you just go through the training again and have a look at some of the drawings in there that we do with the process, why they're considered a range. So when we get a signal that comes out, let's just choose one. Now I'm doing this live, so and I want to show you that this is for the 11 o'clock, and of course we'll probably in a couple of minutes hear a chime go off for the signals themselves. In fact, let me do that right now. Let me turn the sign off so it doesn't blast in my ears. But I want to take one of the previous signals here, and I want to show you something. Well, let's just use a popular pair. Oh, where'd you go? The 11 o'clock. No Euro USD was in there. So let's use an Audi USD on the buy, right? We know that it was on the buy. And I'm going to go to one of my charts here. And this is the Euro USD. So let me drag over the Audi USD here and kind of look, right? Now, what I have on here is simple. It's my support, the DEX support and resistance from DEX indicators. And why I'm showing you with this is because this is absolutely free over on the website. Absolutely free over on the website of dexindicators.net. So you can actually just sign up as a free member and have access to this particular powerful, very powerful system. Why did I do that? Because I know that in order for most of you that are going to be using this next process that I'm going to show you, you're going to need, I don't want to be, listen, we could have upcharged for all this stuff, and we didn't want to do that. I want to be able to offer those people that are learning, there's people out there that just trade, what we call price action. And support and resistance is really about price action trading, right? Being able to see what becomes a valued line, right? What becomes a powerful line. Look, it touches there, touches here, sort of got annihilated here, but it always seems to kind of riddle right back in that area. There's another couple bounces in that area, that kind of stuff. So being able to see this in a macro look as you kind of dial back is how powerful is one of the SR levels and how well this system works. If you see a red line on my screen, it means that it's a trusted, valued level, but how far back does it go? We're not sure, right? So as we sit here now, we know that this Audi USD has a couple of good support levels, right? And we know the difference between a support and resistance level. When it comes up and the price is under a line, the line is then what we call a resistance level because it can resist that higher level. And when it is below a line, when the price is above, when the price is above a line, it is called the support level because it's going to come down and bounce off it and create support, or it's going to push through it. Now, a couple of tricks about SRs. One, most of the time, when it pushes through a heavy SR that has been rejected a few times or supported a few times, the price sometimes wants to come back to that within a handful of bars, right? So whatever time frame you're on, 1 minute, 5 minute, 15 minute, doesn't matter. It always seems that once it pushes past a really strong SR level, that it wants to come back. Here's an example right here. Okay. Boom, pushes through, closes above, right? Which means it pierced it. And then it came all the way back down. It's like, I need to be here. And it rejected it and it pushed it off even further, right? Here's another one. Pushes through, but then doesn't close, tests it. So this rejected it, and then it pushed through, broke it, and then it's like a handful of bars, like, nope, got to come back. And it came back through, right? At one time or another, it may continue to go on, but at one time, it's going to try to come back and touch that level. Why does this happen? This happens because they're trying to meet these demand levels. These are psychological levels at whatever level it is. And you can kind of see how everything's sort of still bouncing around in here, right? So the power of an SR level is on how many times it touches it, how many times. Remember, it's not just about a line, okay? It's about a range. And it's usually a very, not a strict range, but you can have something like between there and right in there that, let me see if I can redo that one. Just like that. So you usually have a couple pips up and a couple pips down where that line is. So it's usually the center line of a range, okay? But we can see that this one's pretty tight. Look how tight it is, You can see how very powerful, especially on the Audi USD. If you get the support and resistance system and have a look at this, you're going to see these margins. You're going to see these marks in there. And that's pretty powerful. I'm going to jump back over and see something real quick. Good. Whew, I'm glad that you could see the whole process there. Let me show you a couple more things here. Let me get back over to DexTrader, see if anything. Okay, so look at this. Watch this, right? These are actual live. Okay, they didn't ding off because I had my sound off. But I want to show you like the British Gold Pound JPY. Let me show you this one, which is set for 143.40. Remember that, right? 143.40. And we know that there's not going to be something available. It's going to be pretty far out, right? So I'm going to show you this, what it looks like right now on the British Gold Pound JPY. Where'd you go? There it is. There we go. Let me get you back all the way to the right. And here we go. What did we say the price was? It was 143.40. And see how far, look, that's sweet. Yeah, there's been a lot of movement since then. British Gold Pound JPY, right. Okay. But even though that we're all the way up right around here, we're quite a bit from where it's been, because there's a tremendous amount of news that was happening over this time, and the signal was diverted into seeing that it's a major down, right? So of course it was, right? Because there's a tremendous amount of news happening. So what happens when this happens, when there's a tremendous amount of news that's happened on the daily, and you're like, well, I can't get into the British Gold Pound JPY because it doesn't have a price available, and it's probably not going to come bouncing back up. Well, that's okay, because here's what you do. Simply take a macro look, okay? Get it to where you can kind of see a couple of weeks worth of, not even weeks, a couple of days. Back it out even further, see where the market is right now. Start looking, and look at this. This is pretty incredible, right? You see how powerful this one line is. I don't know if you guys can see this line. You're going to have to investigate this process for yourself. But then look at the one that's just above right here. Look how far this goes back, and boom, touches right there. Boom, 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 boom. Touches, rejects it, rejects it, rejects it, rejects it. Pierces through, goes up, and look what happens. Now, of course, not in a handful of bars, of course, okay, because it sort of decided that it just wanted to keep going, but it came back recently. and then kept on doing its dance thing, right? Where it made this new SR level here because it was pretty powerful that it rejected. So this range of 8 to 10 pips right in this area was very powerful, right? Even this one right here. So we know now that this SR level at 142, okay? Because remember, the dailies happen on the 20s, right? So 0, 0, 20, 40, 60, 80, 0, 0, right? And on the JPY. So even on the any of the other ones as well, it's the last 2 digits of the pip. So just keep that in mind. So when this happens, could you go to Nadex and go to 14200 on the British Gold Pound JPY? Let's see. British Gold JPY. We're looking for. Let me refresh this down here. If that ever happens to you where you don't see the actual pair available, you just have to refresh in here because I haven't been in here for a little while. So we're looking for what, the 3 p.m., right? The 3 p.m., that's what we're looking for the daily. And we're looking for 142. Well, unfortunately, since with all the news happening right at the moment, Nadex doesn't have something available, right? But because we could be bouncing up, could you put in, here's 142.20, right? Let's go have a look at that. Where's 142.20? Here's the 142, and then you come up to 142.20, you're all the way up here. Is that a possibility that it could bounce off of this area and start coming back up? The answer is yes, it could, right? So at this point, couldn't you simply just say, I want to put a working order on? And make it good, right? Make it a good working order. If you're going to do a low like this, make it good working. Get 25 bucks from it, right? After fees, 23 bucks. Yeah, make it what you want at that point. Now, this becomes a signifier of direction. And then with just a little knowledge that I gave you right there, a powerful model to say, I now know the range and know the availability of direction. Okay. And if this becomes, remember, if it's above the line is support. If it's below the line is resistance. So now if this blue line right here becomes a powerful resistance, if it interjects and comes back this way, can it come back up and hit your margins and break your margins, keep going? The answer is yes, of course, because that's the market. You're in a risk. But what you need to know is that, can you get in even in a better price? If this price is now at 141.80, well, we already seen that we can't get into a price because because the market moves so fast while these British Gold Pound JPYs are being calculated. That's probably why you won't be able to get, this won't fill. Or if it does fill, it'll fill very late in the game, maybe in the last half hour, 45 minutes. All right, let's look at another one. Looks like, okay, so the Euro JPY, let's look at that, 122. Let's look at that. Let's look at that one. Hang on one second. Euro JPY, there we are. I'm going to drag this over. Okay, so here we are again. We're on a macro look. We're pulling back. This whole range area is really, that one particular huge line there. If we dive in here, we could see that it's ranged and just made this sloppy all morning. They've been battling, right? We know that the blues and reds are at war, right? The bulls and bears are always at war. And that's very important for you to know. So when there's a lot of carnage happening like this, is there a good avoidance process? So let's pull back just and have a look. And you see this big, giant, vast of an area, right, of about 40 pips that's happening in this area. But you also see back that this is a pretty good, support zone for when the price gets down to that. Could this thing be traveling to that section? And the answer is yes, it could be. And that makes this side up here a very good position to sell from the sell side. So, but again, 121.60 is about 16 pips from where we're at. So 121, because even that it's on a sell, right? So 121.60. Let's go over to a Euro British Gold Pound or Euro JPY. Go to the 3 p.m. And again, 121.60. There it is. Look at this. Okay. So there is a potential right here to grab that as an active trade, right? But is this high risk? And the answer is, of course it is. Of course it is high risk. Not super high risk, but high enough risk that you know that this 16 pips from there to there, okay, it's sitting at 121.53, and we came down to go to 60, right? If we went up, we could have went up to 80, but we would have been still way out of that money. So if you choke up at that point and hit 60, you know you're kind of playing that high risk now, right? You're coming down off of this break, right? And you don't really know where this market's going right at the moment until you start adding other things to it, right? So if you take this trade and you're at 36 bucks in the trade, you're going to have to watch this thing, right? And this is going to lead me into the second portion of this momentum here, is knowing when can I get out of this process? When is the best time to get out? How much money should I make on this? You know, because it's sitting at 36 bucks. You know, what would you normally make if you did a regular trade? 20, 23 bucks, right in that area. So if this thing starts to really move on and you get, you know, if it really starts to do well, if it starts to drop really well and you get 20, 25 bucks in it, because you could, right? Because it normally won't go over 70% of the profit margin you have on it, right? So if you do get that 20, could you scalp out? And of course, the answer would be yes. Anytime I'm going to make 23 bucks for the trade, I'm looking to get out. So if I get something that's a little higher risk, has a little bit more money on it, I'm looking to pop out at that point, right? Does that make sense? But remember, if you cut your profits, know how to cut your losses as well, right? So if certain things happen and this thing doesn't start to look good or what have you, like I'm about to show you, when do you cut your losses? And that's a big question, right? Yeah, we could have done a buy on that particular one, but there was no, let me show you again. There's no direct correlation with another support line. It's in there that's not in there for a long time, right? And I don't like not seeing another support area for a long time and doing a buy. I could have came down to 121.25 in this area, 121.20. Let me see if that's even available on 121.20. And I could have just did this and did 1 and did 75 and do that kind of process. That way, if it drops down at that point, it could pick up that solution for later. But again, all this information comes from right here, right? Because we know that the dailies are a range, and that range is specific to the pair, okay? For some, it's 40 pips. For some, it's 60, depending on news. It might be even more from that time.